Most people ask, how much house can I buy? And that's the wrong question. Better question is, what payment can I afford every month without being stressed? And how much cash do I need up front? In this video, I'm giving you a simple affordability checklist, your month-to-month number, money to put down payment assistance options, the real cash to close costs, what's actually inside the monthly payment, and the expenses that hit after closing. By the end, you'll know if buying is realistic right now and what needs to change if it's not. Step one is your month-to-month reality, because that's what determines whether homeownership feels comfortable or stressful. The last thing you want to do is get to the end of the month and have $1 left just so you can afford your dream home. Start with your net monthly income. What actually hits your bank account after taxes? This is not including bonuses, huge commissions, not your best month, your real average. Next, we're going to list your fixed obligations. These are your non-negotiables: groceries, car payments, minimum debt payments, student loans, childcare, insurance, anything that's not an option in your life. Next, go to your lifestyle spending. This is eating out. These are your hobbies. This is travel. Don't budget for the person you wish you were. Budget for the real you. If you love extravagant vacations and you budget that for every year, it shouldn't ruin those just to purchase a home. Buying the home should not dramatically change your life. Now ask, are you saving anything monthly right now? Even a couple $100s, because owning a home means surprises will happen. Nothing ever fails when it's convenient. So here's a reminder, number one. Your goal isn't the maximum payment you can qualify for. It's the payment you can handle and still sleep at night. Step two, do you have money to put down? A lot of people think they need 20% down, 10% down, and that's not always true, but you need a plan for upfront cash. When I say money to put down, I mean money you can access, savings, gift funds from family, other eligible sources, without wiping out your emergency fund. Because if buying a home drains your bank account, you didn't just buy a house, you bought stress. If the down payment is your biggest roadblock, down payment assistance programs may be an option depending on income, credit, loan type, and sometimes your specific location. I'm not going to go deep here because it's a very full topic. I have a separate in-depth video that breaks down payment assistance, who it's for, and the trade-offs. Watch for that next. Step four is where buyers get surprised. Upfront cash isn't just the down payment. You'll usually have earnest money deposits, often applied toward closing, but you need it up front when you go under contract. Then you have inspections, sometimes specialty inspections. All of these things add up: termite inspections, roof, sewer. Often you'll have an appraisal. Then closing costs. These are your lender fees, your title fees, escrow, recording, plus prepaid items like insurance, property taxes that are collected up front in many cases. Even a small down payment, you still need a total cash to close plan. The best move is having a lender run a realistic estimate early so you're not guessing what these costs are going to be. Step five is your monthly payment. And this is where a lot of people underestimate the actual cost each month of owning a home. Your payment is not just your loan. It's your principal and interest. It's your property taxes, homeowners insurance, mortgage insurance if that applies to you, and your HOA costs, whether that's quarterly, monthly, or anything else. It needs to be included so you have a realistic budget. So if you say, I can afford $2,500 a month, you need to ask, was that just principal and interest, or did I encompass all of the payments that need to go in that month? Because that's the difference that matters. Step six, this is what happens after you get the keys. Congratulations, you have closed on your new home. Here's a lot of the costs that are often forgotten before you move in. Utilities. If you came from a roommate situation or an apartment or maybe a smaller home, your utility cost is likely to go up. And sometimes there's deposits to get these services turned on. For maintenance and repairs, this is now your responsibility and any costs that go along with it. You've got moving costs. You've got furniture costs. Maybe you don't have enough furniture to fill the entire home. You need to put up blinds. You need new appliances for the whole home. All of these things need to be accounted for. Landscaping. Are you going to take care of it yourself, or are you going to hire somebody? If you're going to take care of it, you're going to need to purchase all the tools to take care of that. If you're going to hire somebody, you need to shop around for monthly costs on what that's going to look like. This is where I want my buyers to keep a reserve. If you can afford the payment, but you can't afford life after closing, that is not a win. So here's the simple formula. Affordability is your comfortable month-to-month number, your cash to close plan, plus your post-closing reserve. If you want help turning this into a real purchase range with actual numbers, please reach out. I'll help you run it cleanly and point you toward the right lender strategy. If down payment is the part holding you back, watch my down payment assistance video. Subscribe if you want more direct, practical real estate guidance without the fluff.